Good morning, everybody. It's Steve Brown from Mirae Asset Securities with Mirae Asset Live. Today we have Mr. Pon van Compernolle of RVC, Emerging Asia Fund. Pon, thank you for joining us this morning.
Good morning, Stephen. I'm very happy to be here.
Thank you. Now, we've known each other for several years. You've recently traveled from Bangkok to Vietnam for some corporate access and meetings with potential investees into your fund. Tell us a little bit about RVC. We're familiar with the fact that you've got investors from the EU to Asia highly interested in your fund. You've got about 20 years experience in the markets and your fund's about 4 years old. So I'll hand it to you to just enlighten us a bit more about RVC.
All right. Thank you very much, Stephen. So RVC stands for Ross and van Compernolle. We manage the RVC Emerging Asia Fund. As you said, we've been operational for about that period of time. Our investors include high net worth individuals, institutions, and we've managed capital for sovereign wealth funds. We are based in ASEAN and we invest in ASEAN. So we're rather sector agnostic. We look for opportunities wherever we see value and growth. We do have a preference for small mid-cap, so half of the fund's holdings are sub $1 billion in market cap. And yeah, we like looking across the region, and that's why we're here in Vietnam today.
So sector agnostic, in ASEAN, your preferred ASEAN investment markets, Vietnam's obviously in the top 3, I would imagine. Do you look at any of the other regional markets, Philippines, Malaysia, Indonesia, or mostly in the Indochina region?
Oh, well, we look across the board at every country. I mean, the wonderful thing about ASEAN is that it's 500 million people. It's the 3rd largest workforce outside of China and India. And every country has its own strengths and weaknesses, its own culture. So let's say like we take Indonesia, for example. In today's world, Indonesia is a commodity powerhouse, right? You've seen the price of coal increase 300% to 500% since COVID had started. You've seen oil at $100 per barrel. As the developed world wants to go more into electric vehicles, Indonesia has every commodity required to manufacture these batteries, copper, nickel, and so forth. So Indonesia is like a wonderful place to invest. And when we look over the past decades, whenever there's a period of high commodity prices, you would see close to 20, 30 million Indonesians join the middle class. So that means something for consumer spending. For the Philippines, the way we look at it is that it is the service force in a way, service workforce for the world. You go anywhere throughout Asia, the Middle East, Europe, the US, see Filipinos dominating the service sector. And what that translates into is remittances back into the country. So 20 years ago, they remitted $10 billion a year. 10 years ago, they remitted $20 billion a year. Today, they remit $30 to $35 billion a year. So combine that with some other local macro factors for the Philippines, and you see why consumer spending is the way it is over there. Thailand, where we're based, we say that, look, it's a tourism powerhouse, right? You are welcome to travel to Thailand. The beaches miss you. But in addition to that, what I would say is that on the agriculture side, it is in a way the kitchen for the world. And we've seen Thai food companies actually move up the value chain. So they're doing very well internationally. And the final point for Thailand would be on the logistics side. Infrastructure, I think it's unparalleled in the region, from the seaports, the railways, and the roads networks. So, and finally, Vietnam. This city, Ho Chi Minh, it's rocking and rolling post-COVID, right? You can feel it. The energy is fantastic and the rate of change is amazing, right? This is the emerging powerhouse in the region by far.
Yeah, the reopening's been a standout success for the nation, for Vietnam. The only thing that's still left to catch up is the inbound tourism, but that's starting because it's only really been at the end of Q1 that they started to reopen the nation. So we're very confident that that will all eventually catch up. The hospitality scene will kick back to where it used to be pre-COVID. Inbound tourism, foreign numbers will kick along as well. Focusing on Vietnam, you mentioned a couple of key points. The parallels with, say, Thailand. There are some commodity companies here that also can add value to the TNT space and the EV battery space. Companies like Masan's MHT, High Tech Materials, with what they've got going on north of Hanoi, and their recent investment into the NeoBolt, which is a fast charging technology through the University of Cambridge. They've taken 15% in that development company. What do you look for in Vietnam when you're focusing on your investment mix? Do you like the consumer growth story of Vietnam? Do you like the financial stability of the markets, the transparency increasing in the marketplace with corporate governance, reporting in English languages, and so on?
I think it's a combination of all the factors you'd mentioned. I mean, everyone knows the macro, the big picture story for Vietnam, which is one, you have the demographic dividends, right? You're coming into a period where the working age of the country is like for the next 5 to 10 years, there family formations, peak spending, so then consumers' purchasing power is obviously going to be there. On the FDI side, we know that Samsung, 50% of their manufacturing, of their global manufacturing is based out of Vietnam. It's amazing. It's amazing. But I think what's also important on the FDI side is that it's quality FDI, which means that we see that it's new registrations, it's CapEx investment, so they're expanding their businesses here, and M&A. So what that shows to us from the outside is that Vietnam is very open for business to foreigners. As in, foreigners can come in here, invest, prosper. They can do it on their own, or they can do it with local partners. And that's fantastic. But what I love the most about, other than the big picture story, is the stock market here. I love the capital markets here.
So capital markets have been going, approaching 25 years, over 20 years for the Ho Chi Minh Stock Exchange now. When the market started, in the first few years, a couple of stocks listed on the Ho Chi Minh Stock Exchange. When Vinamilk came on board, it almost doubled the market cap of the market on its first day of trading. Now we've got approaching 50 companies with market capitalization of over $1 billion USD equivalent. So the depth is becoming quite attractive for international fund managers like yourself, and also the breadth of the market as well. You know, there's quite a smorgasbord of foreign domiciled fund managers coming into the market, you know, as far as USA, EU, UK, Australia, and throughout Asia as well, your fund being one of those. So the liquidity pre-COVID was getting to 20-25% total trading value on any given day for foreign investors. Post-COVID though, that's kind of halved or even a bit more at the moment. It's about, on any given day, say 5 to 15% for foreign investors. Local institutions around about 10, and then the rest is the local retail investors. How do you think the market for foreign ownership limit restricted stocks impacts your investment philosophy? And do you like, as the supplementary question, the local traded ETFs that give you a bit of a basket of investments that are FOL restricted? Do you like that idea?
Yes. Okay. We love the ETFs. Those are great investment products that give offshore investors a chance to participate in names where there are FOL limitations. But when we, say, over the last decade, I remember when we did screenings in the Vietnam stock market, there was, as you said, like Vinamilk they doubled the market cap. I'd say a decade ago, you could only invest in 1 or 2 names, right? And then 5 years ago, just only 5 years ago, you could say that the investable universe became 20, possibly 30 names. And that's when your daily value traded was, what, $100 million? And I think last year, the Vietnam Stock Exchange combined hit $1 billion in daily value traded. That became the second most liquid market in Southeast Asia. It's fantastic. It's absolutely fantastic. And we've visited over, 140 different entities here. Today, we think the investable universe is close to 100. So when we hear the issue about, say, FOL, I don't really see it as that much of an issue. Okay, granted, if you want to buy shares in Techcombank or VP Bank, you have to pay a premium at times, and it's hard to come across shares. However, there's another 90 companies that are fantastic. So we don't see that there's a lack of opportunity. As you said, there's a lot of depth and breadth to the market today, and this is a wonderful opportunity.
And when the market does correct, like it has done in recent months, oftentimes our desk has noted that the FOL restricted securities that typically trade in an off-market SPA contractual way are being offered up on market. So Mobile World Group, even VCB, Techcombank, from time to time P&J as well, lines of stock become available for foreign institutions. They can trade them on market just like a local too.
Yes. No, and what I love is also when you made a point that, say, 20% is institutions of the market, of the daily value traded. We do love markets where retail participation is very high. And it's alpha generation in a way for us, because the retail participation effect drive the valuation of companies to a point where they are valuing the next 5 to 7 years of business today. And for an active fund like us, that's an exit opportunity, frankly, or a time to reduce our position size. On the flip side, when things become depressed or fearful, as they have been for 2022, it's an opportune time for people like us to initiate new positions to increase our position sizes. So I would tell you that over the last 3.5 years, we've outperformed the ASEAN index by 50%. And that's primarily due to our holdings in the Vietnam stock market. However, in 2021, we reduced our positions in Vietnam dramatically to single digits for this exact reason, that valuations became excessive. But as we're sitting here today, I can say that our weighting in Vietnam has increased back to about 16, 17%. And I wouldn't be surprised to see it close to a quarter of the fund before year end.
Good. Now the development of the VN index, the market cap, total market cap has now passed the Philippines Stock Exchange market cap, PComp. It's very close to Malaysia's market cap. And when we look at the GDP per capita growth profile increase for Vietnam as well, you've now seen a situation where GDP per capita is approaching 3,700 US per citizen in 2021 World Bank figures, which is almost about an 80% increase compared to where it was as recently as 2014. The fact is that with that increased GDP per capita, consumer discretionary spending opportunities increase. Also, the ability for travel, investment in the markets, like you've noted, the local retail participation, 80% plus on any given day. So any particular consumer sector stocks, consumer discretionary that you might be looking at that you can disclose in the interview?
As of today, I mean, no, we don't really disclose positions that we're actively building a size in at the moment. Although there are obvious brand name ones that you would know about, and you were trading this would know. Although, Stephen, I'm curious, when you look at the because you've been in Vietnam for a number of years now, right? So I'm curious, what do you see changing in the capital markets here?
Well, the main change that I've seen in recent years has been single stock investors go to single stock investing with margin lending. And so the retail broking community of securities companies really ramping up promotion of margin lending among their client base and also online trading. And they've done it very successfully. If you have a look at the amount of accounts that have been opened in the year to date, it's more than easily the last decade in total. Wow. So we've got now over 5 million active accounts in the market, over 5% participation of the citizenry locally investing in single stock securities. The next development in the capital market that I see coming very strongly now is a lot of the quality brand name asset management companies starting to focus on wealth management products for clients, open-ended mutual funds, ETFs that can trade locally like listed securities, but give the local Vietnamese risk-reduced basket of stock exposure to the Vietnamese equity scene, which is a great thing to see. And then the next thing we're seeing is investment-linked products from the life companies, a lot of them being driven and led by foreigners with experience in this, Eastspring, Daiichi, to name but two, Manulife, Chubb, and others. So this is a great step forward because when I first arrived in 2013, a lot of the asset managers were just foreigners who would buy the key stocks on the Jose and have to pay an exorbitant price, unfortunately, to get what they wanted. Back in that time, Vinamilk was a restricted FOL limited security. So even a basic dairy company would, for a foreigner, have to be purchased at a premium. July 2016, it became 100% FOL relaxed, and the premium diminished, and it could trade for foreigners as easily as for locals. So development of an expanding FOL is one thing that I like about the Vietnamese market. Expansion of open-ended funds and ETFs for the local market is something I find highly attractive for broadening the investment opportunities and investment classes for the locals, and as equally for investment access for foreigners if they can buy a listed ETF. That's one way. And hopefully the continuation of the English language investor relations and media release capabilities of the listed constituents of the Ho Chi Minh Exchange and the Hanoi Exchange and its subsidiary board, the UPCOM. There's also increasing foreign securities company interest in Vietnam, and that has been a tremendous thing to see. And the company I work for, Mirae Asset, in Vietnam for over 15 years, with a leading exemplar of that, and we have a very good view with Vietnam, like you and your fund. We think it's an ASEAN outperformer. Our other outperforming market is Indonesia. Your fund knows that market well, and we think that the profile for Vietnam right through to now to 2040, the working age demographic for Vietnam won't peak until 2040. So if you have a look at how it's developed in other markets, China and Korea working age peak was 2015, so they've already been and gone. So we, like you mentioned before, a lot of accounts are opening up, a lot of families and households are getting together in Vietnam. They're becoming homeowners, they're getting mortgages, and your investment mix for Vietnam can look at all of those areas. When I arrived, people could still buy a house with gold or an apartment with gold, and nowadays you can draw down on a marketplace of mortgage providers, from international banks with presence in Vietnam to all of the mainstream local banks as well.
That's fascinating.
It's like any normal market in many ways now. Even though it's classified as MSCI Frontier, it's at the forefront of emerging, in my opinion, and it should be hopefully included in MSCI Emerging in due course.
Okay, so then we're going to potentially, I think, like you commented many times to me in private, you might see a base floor for the market in the future as more and more institutions come in, right?
Yeah. The market PE is now at a relatively attractive ASEAN peer level. It's a tick over 13 times. So in historic terms, that's not too bad. One thing which is a little bit higher is the PB, but the PB is the price you pay, not the price to book, to access Vietnam. So once you're in, you're set in some of the growth stories. It's you tend to just have to pay a little bit higher. For instance, when some of the big banks listed in Vietnam in the last few years pre-COVID, the PB for those through the IPO period was quite high, 2 to 3 times. But now, if you look at the PB of some of the leading banks in Vietnam, it's very competitive on the ASEAN and international scale. You're talking 1 to 2 times, more 1.5 for quite a few. So if you look at things in context, I think a bit of a price for a foreigner to get in, but if you do your homework, like your fund has been doing for a long time, more often than not, you can pick the outperforming growth stories, and you know that at the end of the day, GDP per capita is going to go up.
Yes.
It's a developing, growing market. It's still not at maturation phase with a very rapidly aging economy, and so the consumer discretionary stocks on offer, such as jewelers and so on, the mobile technology providers, they're in the sweet spot, and they will be for quite some time.
I will comment that I think the banks are wonderfully attractive at the current valuations, and we do hold the top 3 banks in a way. I think Vietcombank is a wonderful enterprise. VP Bank is also fantastic, and Techcombank, I think, was the one you're referring to that had the expensive IPO back then. But today it's not expensive anymore. It's rather attractively valued. But Stephen, I hope you don't mind that I'm asking you some questions.
No, it makes a nice change.
We all know the bull case, right, for Vietnam, but is there anything that we fly in, we're 2 hours away, we don't know what's always happening on the ground day in, day out? Is there any bear story, any bear case for the country, in your opinion, or how should we look at any potential risks, if any?
Yeah, well, I think the primary one is the potential of infrastructure bottleneck. From a logistics point of view, the growth of the country is very rapid. In the north, they have some massive ports developments going on. Deep Sea is one. Here we have Gemadep with Gemma Link going on. That's all well and good, but what's needed is destination ports, LAX, and then LA port. The backlog of shipping containers to get through LA port to the destinations is one thing, and Nike is a major shoe and clothing manufacturer here, for example. So things to be a bit not concerned about domestically, more like at the destination of the industrial park production from Vietnam. How is the post-COVID situation going there? And if you have a look at the inflation recession story, say, for example, in Vietnam's one of the largest bilateral trading partners, USA. Every recession since World War II has traditionally seen you've had CPI go up, you've had unemployment as well, people can't find jobs. But this one, due to COVID that we're entering into, the prices, CPI is going up dramatically, inflation is going up, but there's also a shortfall of employment. A lot of people are now needed in a lot of jobs. And the trouble is, a lot of people post-COVID have changed their lifestyles, relocated. A lot of them are still work from home. City of London is an example, particularly if you're in the civil service. On any given day, over a third of the staff are work from home. So the situation for Vietnam is they can manufacture the products, okay. Getting it to the ports here, okay. The shipping and the logistics, yeah, they can do that. But when they go to the LA port and other ports, that's when it kind of hits a stumbling block. And remember, the companies here in the industrial parks are mostly foreign. So if they have a bit of a wind down of their output, it's not because of anything going on in Vietnam internally. In fact, the increasing GDP per capita is good for Vietnam's internal consumer market story. You know, the youngsters can buy more Nike shoes here, t-shirts, baseball caps, that's all fine. Watches and mobile phones. But unfortunately, we're very much beholden to what's going on macro level USA. So what should we be concerned about for that is hopefully they will get inflation under control, people will get back to work, and then everything will become much more smoother. I think the FDI problem here is not a problem. There was a curtailment with the Chinese relocations with COVID, but that's all coming back now. Vietnam, Singapore industrial parks are expanding. Lego, for instance, entered the Vietnam Singapore industrial park down Binh Nhung province. Over $1 billion capex they will spend there, and it'll be one of their 6 global Lego factories. So that, to me, shows Vietnam's doing okay. So, Pon, what are your thoughts about Vietnam's advance to potential MSCI emerging market status? Do you see that on the horizon within, say, 3 years or within 5 years?
Wow. Well, I would hope that is the case because, frankly, we can tell you as an international investor, the pre-funding requirements is something that we find rather tiresome because, for example, in a retail-dominated market, when there are periods when we see names drop 7%, 7%, 7%, 3 days in a row, and we think this is an attractive entry price to increase our position perhaps, and we transfer the funds over, but that takes maybe T+2, T+3. By the time the capital arrives and we may be able to execute, we may have missed that entry point. I don't say we're short term, but the entry point is very important for us, right? We don't want to overpay. So should the Vietnamese authorities work on this and the SPV become a bit more relaxed or figure out other regulations in how to manage the FX, then I can see there's no reason for Vietnam to not join the emerging market status at all. I mean, it should be there already. So.
Yeah, because it's by far the dominant weighted constituent in the frontier MSCI index. And we've had people interviewed in recent times who think there'll be no problem. They've set themselves up back office wise. Tim Evans, CEO of HSBC Vietnam, noted that domestically they're one of the largest, if not the largest custodian service provider, and their back office is well prepared, you know, for advancement, for the inflows that will increase given the MSCI emerging market status, if that comes through. And the increase of FOL, would you like to see that happen? Because banks are capped at 30% at the moment. So would you like to see that increased? Any other sectors you'd like to see opened up? TMT space, logistics space?
I mean, this is also a cultural question at the end of the day, right? If the government would like to maintain control in a way over certain sectors, it's their country, it's their home. We fully understand it. However, as long as If 51% is considered control, perhaps then yes, it's an argument to increase FOL. But like I said earlier, there's 1,000 listed entities in the Vietnamese stock market, right? We've seen 14% of them. I believe over the next 5 to 7 years that maybe the investable universe will expand to 200, 300, right? I would not be surprised to see the liquidity increase to $2-3 billion a day. So if certain sectors have an FOL limit, okay, fine. We can understand it because, like we said, the one thing that I've liked about the Vietnamese economy is that it is very open. Right? We do see multiple different businesses, domestic and international, come or open and thrive here. So FOL limits or not, I don't think it should deter any investor from coming here.
And even places like Korea went through a period of FOL limitation and then more relaxation. Australia as well. Commonwealth Bank of Australia used to be wholly government owned. Qantas, the flag carrier, used to be wholly government owned. Telstra, the leading TMT, used to be wholly government owned, and then they equitized later on. You know, so I think you're right. You know, at the end of the day, it's up to the government. The questions that come across my desk tend to be more access to the stock rather than the FOL off-market SPA type of process. That is quite a standard process. The sophisticated investors are quite aware of it, you know, and they just have to get the appropriate legal counsel, do the paperwork, and then it's all done anyway. Yes. You know, so you still can do that and get access to hard to get sought after securities. Pon, thank you very much for joining us today on Mirae Asset Securities, Mirae Asset Live, and it's always a pleasure to see you. And on a personal level, you've got a wonderful little boy coming along, joining the family.
That I do indeed. Thank you very much, Stephen. Thank you very much for this opportunity. I do appreciate it very much.
Thank you, and we hope to see you back in Vietnam very soon, and always a pleasure to have you on. Steve Brown from Mirae Asset Securities. Have a good morning.